Good morning and welcome to Forex in Four. Today is Friday, September 2nd, 2011. This morning all eyes are on the U.S. non-farm payrolls report, which is due out at 8:30 a.m. Eastern Standard Time. And the expectation is here that we're going to add, wow, it looks like it's been revised a little bit lower, anywhere between 65 and 75,000 jobs. I'd seen numbers a little bit higher earlier in the week, but it looks like they're sort of ratcheting down. All right, they're expecting unemployment rate to stay at 9.1%. And in fact, the White House just came out with their economic estimates. They say that we're going to see over 9% for the rest of the year. So, hey guys, thanks for the heads up. But I think the markets have already factored that in. But anyway, today's going to be an important number for a couple of reasons. One is it's going to give us an idea of how the economy is doing, as it always does. But the second thing is that it's going to really determine what market expectations are. And I think a lot of people are expecting that this number is going to come in worse than expected. I think there's also, I'm not sure how this is going to factor in, but there's some talk that perhaps there's a big strike at Verizon, a telecom company here in the U.S., which I don't know how that's going to affect the number, if that throws it off or it skews it a little bit. But I did hear somebody speaking about that earlier. We'll have to see how this plays out. But the idea is this, is that if the number comes in better than expected, then perhaps that means the economy's doing a little bit better, which would be a good thing. All right, but that also means that perhaps the Fed is going to give them pause for any further monetary easing. Now, the other school of thought is that if the number comes in worse than expected, all right, then that means that the Fed's going to have to come back in with further quantitative easing. And we talked about the prospects of QE3, Bernanke's speech at Jackson Hole, plus the Fed minutes, really have sort of set the table for further action. So I think the market's sort of waiting for that and hoping for that to happen because more easing means better gains for stocks. It probably means more inflation. All right, so you can see the euro here. We've been selling off and we're in risk aversion mode to start the morning because I think people are just uncertain what's going to happen. But I just want to show you the price of gold here. Okay, and you can see that gold shot up here, and we're back up, not quite up to this 1900 levels, but we are up over the daily pivots on the resistance up here. And one of the reasons is that if we do get further easing, all right, that means that the expectation for inflation goes higher. That means we're probably going to see gold continue to rocket up. All right, but you can see here there hasn't been any real other news to note. We had some PMI figures that came in from the UK. Construction figures, they were a little bit worse than expected. I wanted to mention the U.S. ISM manufacturing numbers yesterday. They actually came in better than expected. I did the video before that came out later in the morning, but it's the kind of thing where we've been setting the bar so low on the expectation of all these numbers that any of these beats come in and do better, that it's seen as positive, but the numbers are still weak overall. So we also had Eurozone PPI numbers came in as expected, but obviously all eyes are on this U.S. jobs report. So, not a whole heck of a lot going on in the markets. You can see Euro continues to sell off versus Swissy. We have Swiss franc strength. Look at dollar Swissy here as well. It looks like the exact same chart, okay? And that's due to the risk aversion in the markets. We can look at dollar yen. All right, and you can see that dollar just sort of hanging in here in this range. Now, I think in Japan, the new premier, he grabbed some guy for his old spot of finance minister, and this guy's new to the party. No one really knows much about this guy, and he's relatively unknown, which maybe that's a good thing. They need some new blood in Japan with some new ideas and some new thought on how to get that economy going, because they've been in that 20 years of deflation and just economic malaise over there. 20 years of one lost decade. So we'll see if this guy's got any ideas to get the thing moving. But my opinion is always, well, if you're doing something that's not working, do the opposite. But I guess that's why I'm not in those positions. In any event, you can see here that early on risk aversion going on. We've got the Aussie selling off a little bit. Okay, you can see that we've got the Kiwi doing a little bit of the same, but it's sort of settling in right around that 85 area. Looks like it's going to oscillate back and forth around the pivots. Dollar CAD, that's interesting. The U.S. dollar versus the Canadian dollar. You can see that this has been sort of a wide range, but if we just break it out a little bit on the 2-hour chart, Okay, you can see that we're back down sort of near the lows a little bit. So perhaps, it looks like maybe we could be setting up for a lower move here, which would mean dollar selling. And if dollar selling happens, that means that we're going to get a bounce in the markets, and it means that the expectation is going to be that we are going to see QE3. So that could mean that perhaps we're going to see worse than expected jobs numbers. So 65,000 appears to be the estimate. I saw 75,000 earlier in the week. We're going to see how that goes. But if you're looking to trade this event, all right, you got to be careful because the volatility is obviously pretty intense. But Euro USD is always a good pair to trade. Okay, and we'll go back to the 30-minute chart. Okay, because euro's the anti-dollar. All right, and you can also look at dollar CAD as well. Now, I think one of the other things that may be interesting is, I don't necessarily know that I would trade this based on how the market's going to react, but dollar Swissy could also be interesting as well, because if the market thinks that we're going to go into some sort of risk-taking mode, if we flip around and the futures come back from negative to positive and we start selling dollars, is that going to mean that the Swissy is going to continue to strengthen? All right, even though it's more of a risk aversion play, or will dollar actually strengthen versus the Swissy? So that's an interesting dynamic to take a look at. But if you go back a little bit and we look at this on the 2-hour chart, you can see right here that we just broke down a little bit of that pivot point support at about 78.20s, and we're sitting up wow, just ahead of 77.50 there. So that's a pretty significant level. There could be a buy in there as well. So we're gonna have to see, but that's what's really happening. I mean, we know about the economic malaise we're seeing here in the U.S. and abroad in Europe. And next week we're going to get an ECB meeting. We're also going to get President Obama who's going to give us his jobs ideas on Thursday. And we'll just have to sort of see how it goes. So keep an eye out for volatility. If you're in positions, be prepared for that. And if you're looking to get into positions, I always suggest that you wait for the number to come out first. Don't guess what's going to happen ahead of time. Take advantage of potential moves, the potential fake out ahead of time, and see if you can get yourself a low risk opportunity. So that's what I've got for today, folks. 8:30 a.m. non-farm payrolls report. Good trading to all.